Today on Spotlight Now, we address the rising concern, or we would address the concern of rising insurance costs in the state of Hawaii.
Yeah, many owners are seeing their rates go up dramatically. The governor has said he may call a special session to address this issue. We've got experts to answer our questions and yours. Spotlight Now starts now.
You're watching Spotlight Now with Ryan Kalei-Suji and Yunji Denise on Hawaii News Now. Have questions or comments for our guests? Join the conversation in our Facebook live stream. Spotlight Now, where Hawaii comes to talk.
Well, hello, and thanks for tuning in here on this Tuesday for Spotlight Now. We're going to get to our first guest in just a few moments. Before we begin, we want to thank all of you for tuning in, those of you watching both on air and online, and encourage you to really participate in this conversation with our guests as we talk about the rising costs of insurance. For those of you who are watching at home, you can enter and be involved in the conversation by scanning this QR code that you see in the corner of your screen. We'll be moderating comments throughout our show and integrating them within our questions. You can also enter your questions on our Facebook page at Hawaii News Now.
Yeah, we've got a great panel for you today with Insurance Commissioner Gordon Ito, along with House Speaker Scott Saiki. But our first guest is really an expert in this field. She's been working in the world of insurance for many, many years. The owner and president of Insurance Associates since 1975, Sue Savio, is here with us today. Her agency really specializes in helping insurance condominiums find their insurance townhouses and community associations. Thank you so much for being here.
Thank you for having me.
And on a personal level, you also are on several condo boards as well. So I love that you come at it with all of this knowledge.
Well, I'm here to help.
And we need a lot of help. So tell us a little bit what is happening specifically in the condo insurance market and why owners are starting to see these rates go up.
Well, I think you have to understand that America had 28 catastrophes last year in 2023. And the reinsurers who pay all those claims, roughly $145 billion, basically are the same carriers that reinsure our insurance companies here. So the rates, when Lahaina brought us front and center, the reinsurers realized they had raised the rates in America, a contingent in America, but they had not raised Hawaii's rates. So with Lahaina, all of a sudden our rates are going up, and they went up greatly. The reinsurance contracts were signed in the first quarter of 2024, and the rates not only doubled and tripled, and we are basically seeing a 300 to 500% increase on the average.
300 to 500%.
On the average.
And just for our viewers, we're talking about two different kinds of insurance. And for those of you at home, if you own a condo, you know that you have your personal insurance on your unit itself, but there is a master policy for the building. So Sue, what are we talking about, the individual or the master or both?
We're talking about both, but not as bad for both. But on the master policy, that's the one that insures the building. Everybody pays for it in their maintenance fees. Those rates have gone up greatly, okay? And for wood frame or steel frame or hollow tile, more so than for the concrete structures. Of course, the concrete structures have other issues going on, but basically, concrete structures are seeing maybe a 200 to 200% increase. Wood frame, steel frame, hollow tile, the others are probably seeing somewhere between 300 to 500% increase. And unfortunately, some people are seeing even more. It depends upon the types of claims, what you've done to maintain your building. So all of these are factors, but the biggest factor, of course, is the cost of reinsurance. Now on the HO6, the personal policy, which is called an HO6, Homeowners Form 6, you're seeing maybe an increase of 20 to 70%, much less. My own homeowners came in at a 33% increase. I figured out how much my company got as a raise, as an increase from the insurance commissioner's office. And those rates are, allowed by the insurance commissioner. He allowed them to, with all the losses in Lahaina, he allowed the companies to increase rates. And that's fine. We expect that to happen. We just didn't realize that the cost for the actual structures was going to be such a large increase. And maybe we should have realized because of what's been going on in Florida and California all these years, but we sort of been always under the wire. And then all of a sudden to have it just not go 100%, but to go 300% or 500%, it's frightening. And it's frightening for the owners because all of a sudden, especially if you're young and you just bought in, or if you're old and you've retired, all of a sudden you've got a set income, or you were just making it with the mortgage to get into your first place, and now we're going to charge you 300, 400, 500 more a month, strictly because of insurance. It is frightening.
And is there a difference between when we're talking about this master insurance that covers the entire building, specifically with hurricane insurance? There's different types, of course, of insurance. Which ones are we seeing a more significant rise in, and why are we seeing such a vast difference when it comes to those policies?
Okay, well, we're seeing the master policy, what it is called the master policy, we're seeing the rise there because even though it was a fire that hit Lahaina, the reinsurers still consider Hawaii to be a hurricane state. So for us, it's our hurricane premiums that's going up, but it's still the property premium. So whether it's a fire or a hurricane, we're seeing that's where our premium is going up. So, and there's nothing we can do about it because 30 years ago we did have a hurricane, and possibly we're going to have another one at some point in time. So we are a hurricane state, not like Florida, but we still do have issues with it. And so to the reinsurers, they're going to charge us not as much as they charge Florida, but they're going to charge us more than we have been paying, which before Lahaina, we were probably 30 to 40% lower in fees, costs, than any of those mainland states.
Wow, huge difference. So
We've
have we
always-
essentially been underpaying this whole time?
Well, I don't know that we've been underpaying. Let's just say we haven't had any catastrophes, so we were kind of under the wire. Nobody was paying attention to us, and I like that nobody paid attention to us, and all of a sudden Lahaina put us front and center. So I don't want to say we were underpaying. Though you will, all the underwriters, in fact, every year when I try to get companies to come into Hawaii to write some of our condos, they always say your rates are too low. And I didn't believe them, but now I understand what they're saying. The mainland was paying a lot more, even though we had no catastrophes. We were still under the wire, and they were saying our rates were too low and they weren't interested in writing business in Hawaii. So maybe Gordon Ito's been doing a good job keeping the rates down.
And he's our guest in the second half. But I want to go back to this, the percentages and what that actually means in monthly payments for the average folk. Tell me about what kind of stories you're hearing about how much this is increasing and what that does to some people who have lived in their condos for some time, or as you say, may have just bought in.
Well, I've gone to many meetings trying to explain to the owners what has happened, because obviously the board doesn't want to say we're raising your maintenance fees. They want someone to come and explain it. So I've gone to many, and I've seen areas where the board has said we have to raise it $5,000 and we're going to ask you for $2,500 one month and $2,500 the next month. Now I personally would think most owners would be, what? But this one group just said, okay, and that's what they were doing. In 2 months, they were going to pay it. Others are stretching it out over 4 or 5 months. Others are saying, well, our policy renews in November, December, and we're going to raise the maintenance fees, and we'll work it in for next year's. Others are saying we have no choice. We have no money to borrow. We've just done our painting and our spalling, and we spent every penny we have. We're now going to have to assess everybody $500, $600, $700 a month. So there's all kinds of reactions to what's going on. And anybody who has to come up with $500 or $600 or even $400 or $300 that you weren't planning on, that's a lot of money, and that also affects our economy, I would think, because we're not out taking the kids to play trampolines, and we're not going out to dinner, and we just can't afford to do it anymore.
And this is in perpetuity.
Well, until things calm down. In other words, like in Nikki, it took 2.5 years for our rates to come back down. And so I'm not saying it's going to only take 2.5 years, but if we can control catastrophes and if things get back to normal in America, which we're part of, then I would expect to see our rates coming down. And in fact, we just got a hurricane quote for one of our complexes where it was reduced about 3%. Not a lot, but I'll take what I can get, and hopefully it'll start to, come down.
What about some of these developments and buildings that have yet to break ground? They're selling out there. They're selling it to those customers and consumers out there who are looking for a place to buy into. This is a new development. They don't have any existing policy at this point in time. What kind of issues are they running into? Are they seeing any issues just getting that sort of coverage?
So they're not having trouble getting a builder's risk to build. But what you have to understand is the developers are coming to us and saying, we're going to work on the maintenance fees. Last year you told us, based upon the rates, this is what the maintenance fee is going to be. And so I'm saying, well, today, based on today's rates, you had the maintenance fees at $300 or $500 a month. You're going to have to double that, or you're going to have to add in $200 more a month. And so, of course, the developers aren't liking that because they want to keep their maintenance fees down to get the people to buy in. But if they were trying to sell it today and they have to give them a realistic cost, it messes them up as well because it's much more than they anticipated. So I'm sure those who haven't broken ground are waiting to break ground when things go down, and then they start to sell it. They can say, based upon today's cost, and not meaning now with the high rates, your maintenance fee will be about this much. Because that's how a lot of people buy those things that aren't built.
How big of a portion of our housing market is this, and is this happening essentially to every building?
Every condo building, high-rise, low-rise, commercial or not, is seeing rate increases. So are the shopping centers and the person who owns an apartment building or the malls. Everybody is seeing their property rates go up. No one's getting away with anything. Unless you own an insurance company, you're not getting away with anything. So everybody's seeing rates increase. For the residential condos, it's hard for us in Hawaii because many of ours are very old, and we not only have insurance issues, we have pipe issues, and we haven't done our roof, and we haven't done our spalling, and we haven't done our sprinklers, which we have to be doing, or at least planning to do, because then that's going to be an issue as well. So they've got a lot of condos that have a lot of claims and have not taken care of things over the last 30, 40 years. They're probably seeing the worst increases compared to the condo that can say, in fact, I had a condo. I said, tell me all the good things you've done. It was a wood frame condo. And their premium was going to go from $460 to $1.5 million because we needed 100% of everything. So, but then they gave me a list of all they had done in the last 10 years, and I got it down to 1.3. I mean, just because they did maintenance. But when I asked somebody to tell me what you've done, when did you do the roof last? Oh, we've never done it, and it's 50 years old. How about your pipes? Oh, we've never done our pipes, and they're 50 years old. That doesn't get you any credits. So maintenance is high on the list.
You had spoken about that this impacts shopping malls and other places. And so I'm assuming that also impacts those commercial businesses that we often find in some of these condominiums. How are they also being impacted by this as well?
Right, whether it's a residential fully or whether it's a commercial on the first floor style like a lot of Waikiki is, they still have to pay an increased maintenance fees because they own a unit in a condo, which rates are going up. So it's going to affect their business as well. Or if you're the landlord and you've given out a lease for 5 years and you say that your lease can only increase it by maintenance fees, well, is it a maintenance fee increase or is it a special assessment? Can I increase the rent or not? So it affects everybody, whether you own or rent. Everyone's going to be affected.
Okay, so now let's say you're a building and you're a condo board and you see that 100, 200, 300% increase and you say, you know what, we're not going to do it. Is that an option? Can you choose to essentially underinsure the property? And how are you counseling your clients on this?
Okay, we are telling our clients that 514B Hawaii State Condo Statute says that you are to insure for 100%, and it's special causes of loss, which includes hurricane. We are telling them that their bylaws require them to insure for 100%. We are telling them that Fannie and Freddie will not do a conventional loan unless you are insured to 100%. We are also telling them that their directors and officers policy does not provide protection to them if they get sued for making an insurance error. They're supposed to hire a professional. The professional is supposed to make sure you're adequately insured. If the board follows the professional and I mess up and they sue me, that's fine. But if I tell them to do this and the board makes a decision, and it is a board decision, not the owners. The board makes the decision to underinsure and not get 100%. They're putting themselves at risk. I've heard all of the 5 major condo attorneys tell everybody you could possibly be putting your personal assets on line. So it's a big decision. And when my board, which I did not vote, because obviously I'm the insurance agent for my boards, I said, here's the increase. They were not happy. I said, what are you going to do about it? You have we won't buy full coverage. I said, well, okay, you make the decision. I told them why they should buy full coverage. They decided to buy full coverage. And I told them I'm glad they did, because even though I've been board president on one for like 30 years, I said if you didn't buy full coverage, I was going to have to resign. Because I can't take a chance that my personal assets would be on the line. I got grandchildren. I want to be able to make sure they have the opportunity to live in Hawaii. So yes, it's a hard decision that the board has to make.
And some people are deciding not to do.
Oh yes, quite a few. I would say there's at least 300 condos that don't have full hurricane coverage. Though some are coming back and saying we can't buy and sell, and people are upset, we're going to buy it, and then they're buying it after the fact.
And what kind of communication is going out to the condo owners that live in the building? Because a board is essentially making that decision. And like in your situation, if someone in that place does not agree with that and they don't feel safe, I mean, are you seeing any sort of altercations or disagreements within, a unit?
Oh, I'm sure there are a lot of disagreements. And even though I go to the board annual meetings or I go to the town hall meetings about it and try to explain it, I mean, there's always a few very upset people, and that's understandable. This is their livelihood. We're taking money out of their pocket, whether they plan to do something else with, and making them pay insurance of all things. We've never had a claim. We've never had a fire. The hurricane hasn't come for 30 years. Why is it so expensive? And I do understand that, and they're upset. But as I try to tell everybody, it's not forever. If it's like Iniki, maybe 2.5 years. Hopefully it is that or less. And it's still, real estate is still a great investment. It's still the biggest asset we own. It's still something that we're going to plan to pass on to our children. I always say that to the gray-haired people in the audience. I know you're on Social Security, but you're going to pass this on to your grandchildren, and they're going to be thrilled that you gave them the chance to stay in Hawaii if they want to stay, because they own property.
Well, I want to key into something that you said with Fannie and Freddie not wanting to write a traditional mortgage. So if you are a homeowner or a condo owner, and your building has decided, we're only going to insure it 50%, right? You have a $100 million building, right. Only 50% of that, right. $50 million is covered. What happens to the owner who says, okay, then I'm out? Can they sell their unit?
They're not going to be able to. They could sell it for cash, no problem. They're going to have to try to do a non-conventional loan, what they call a portfolio loan. There's a couple of brokers here who have mainland markets. There was a private investor for a while that was working with one of the banks here, and he was willing to loan to people who were not in a building that was 100% insured. So there's things like that, but it's not as easy. It's not 5% down. Maybe it's 20% down, compared to a conventional loan where you can get it for 5%. And so it's more hoops to jump through, but there are sales going on.
When we look at this just issue as a whole, obviously this also impacts just housing and availability. One of the biggest issues that we hear from our lawmakers that we interview here on this show is the cost of living, and try to get people to be able to afford to live in Hawaii. With this issue now on top of all of that, I mean, how difficult does this become for those who are looking to become a homeowner? And in a lot of cases, a condo is usually a great way to begin that journey for those who want to begin the process of owning property. I imagine that this creates much more layer of difficulty.
Oh, much more layer of difficulty. In fact, I talked to some young kids who had said they just bought, and how are they going to afford this $400 to $500 more a month? I said, they said, there's no way. I said, you're right, there is no way, because I was yakking with them. I said, but you know what? It's time to go back and live with mom and dad and rent the unit out. Don't sell it. Rent it out. Keep it. This thing will pass, and then you can move back and start your life again. Because we've got to come up with some solutions. We can't just, whether you have to borrow from family to do it, or if the grandma and grandpa raised the kids and now the kids need help, or vice versa, grandma and grandpa need help, maybe the kids who are working need to help out. I mean, we all have to come together and figure a way to make it so that we can all hold on to our real estate. It's not going to be forever if it's like Iniki, maybe 2 years, maybe less. Let's get past this and go back to the lifestyle we had and say, okay, I passed that crisis in my life, I still have my unit. That's because that is your asset. That is the opportunity that you have to live here. Otherwise, you're not going to live in Hawaii.
But you did say there are about 300 buildings in town where they have gone for the underinsured model. Right. And so does that mean that those buildings can't trade in a traditional way? And what does that do, as Ryan said, to the housing market overall?
Well, some of the buildings have lawsuits against them anyway, so it's very hard. They're suing a developer or something of that sort, and it's very hard to get conventional loans anyway, and it's more difficult. There's some condos that are leasehold, and they have a very hard time because the lease is running out. So they don't ever worry about getting conventional loans because they don't get them. So those kind aren't worried about it. Others are saying, we're going to do 50%, a building's secure, we feel it's concrete, if the hurricane came, we've got ample money. Plus we have money in reserves to cover some of the other things that they may need. So there's those kinds of people who have made a financial look at it. Other boards are just saying it's too damn expensive, we're not going to do it. So it does affect the owners who are living there. I mean, and if I were an owner and lived in a building where I felt we did not have enough to take care of it, I surely would be talking to that board saying, you only have 10% or 20%, you better raise this at least up to 50, or, I think that's what owners have to get involved with. But it's very hard. They're so upset anyway, and they're blaming the board, and it's really not the board. It's just the insurance marketplace.
And these are volunteer boards. I mean, these are not necessarily professionals. These are just folks who have the time to serve on these organizations, I mean, you have a very wide variety of educational and professional experience to even do this job.
Sure, you have people who are doctors on boards and you have people who are housewives on board. There's nothing wrong with either side, but their experiences are so different. And then all of a sudden you throw at them the fact that, oh, by the way, you're going to charge you $300,000 more this year because the hurricane is being a problem. And then you ask them to make a decision when they have no money to do it. And so basically they say, well, forget it, we're not going to do it. But again, it's up to the owners in the complex to say, we need you to do this or we don't need you to do this, and see what happens there.
This, of course, has been an issue that has caught the attention of leadership in the state of Hawaii. The governor on this program said that there may be a need for a special session to be called in order to address this issue if things aren't being able to be resolved. We'll be speaking to House Speaker Scott Saiki in just a few moments about what they're doing as well. But I wanted to get your thoughts on what you think the legislative body, maybe the governor, is there a way to help provide relief? And what does that look like, knowing that this could be, as you said, a few years? This isn't something that's just going to take a one-time bailout. This could be something that lasts a while. What do you think should be done where the state can step in and help?
I hope the legislatures have more brains than I do, but I know the Hawaii Hurricane Relief Fund helped us when Iniki hit. And the Hawaii Hurricane Relief Fund is still with us. I know it's dormant, but they can resurrect it and put some more cash into it. I'm not sure where they're going to get the cash or how to do it, but I'm sure that there are ways to make it less painful. It will always be expensive for a while, but if it were less painful, it wasn't quite $500 a month, but maybe it's only $300 a month, that type of situation, it would make a huge difference. And I think the legislature and the governor, they're going to have to put their heads together with the business people and come up with something, whether it's a California where you have your own fair plan, or Florida with their captive insurance company, whatever the case may be, for at least a while, like the Hurricane Relief Fund did back with Iniki.
It's interesting because we've seen more and more storms. We've seen more and more severe weather events, wildfires on the continent and beyond. When you look at the weather, there are hurricanes out there right now. You must be watching it not just here at home, but really around the globe. Tell us about that.
Well, I do. I've already know that in 2024 we've had 11 catastrophes in America. Now, last year we had 28. So I'm thinking, okay, 11 times 2, 22. Can we get through this year with less than 28? Because that was really a obnoxious year, and we used to have 18, 19, but of course if you go back to the 1980, you'll see we used to have 4 or 5. So obviously we're messing up our climate. Even though people don't always believe in climate control, I think we're probably messing that up. And I worry about it because I don't want to see our rates go up even more because of what happens with America, because now we are in the eye of the reinsurers, and we will no longer be way under what the mainland companies are paying.
Well, and so what I'm interested in is you were saying, hopefully this goes away in 2 or 3 years, but climate change is with us. King tides are with us. These severe storms are with us, these severe rain events. So how can you be so confident that it'll just take 2 or 3 years?
Well, because even though Iniki hit and we got rid of it in 2 or 3 years, we had more catastrophes that were going on, but the industry was able to go back and raise it up slowly over the years and not just do this large, huge increase. Do I see 15, 20 years from now us paying this higher rate? Maybe. It will take that long, or 20 years for it to get up there, but that's different because the cost of living and everything is going up, and so the dollar isn't as valuable. So that type of thing I'm not worried about, but I just don't want another year of 28 catastrophes, because then we're stuck again, or another $100 billion paid out in America. And what worries me is that maybe at some point in time, the insurance industry, just like they did with flood, we can't handle it, so we're going to give it to the federal government to control. And so what if we don't cover hurricanes and earthquakes and wildfires, and we just go back to regular fires, and we just go back to the regular homeowners policy? Our rates will go way down, but do we really want to buy and own real estate and have this gorgeous asset that's worth lots and not have the fact that a hurricane may come and destroy us? So it's a catch-22 on how you want to handle it. We need the insurance companies, but we don't want to pay for it. But as I tell people, we'd all pay double if we would guarantee that our house will never burn, or we'd never get in a car accident, or I'd pay 3 times as much for my life insurance if somebody said, as long as you pay it, you won't die. When I'm ready to die, I won't pay my premium. It doesn't work that way. So we need the insurance to help us.
And this may be a naive question, but when we're looking at from a global perspective, America is not the only one that's suffering through this. I mean, is there any other country or policy that's done in another country that maybe we can learn from, or any sort of reform overall that can help? Because I imagine this will just continue to be an issue. There are going to be more of these disasters that happen. Is there a model somewhere that someone's doing something different and unique?
Well, I think what we have to understand is our building codes need to reflect that we're a hurricane state. When a condo goes to replace their windows after 25 or 30 years, they need to put hurricane impact windows in. We need to make sure we always hurricane clip our roofs to our foundation, to our walls to our foundation. We don't build as if we're a hurricane state. And I think that's a part of our problem. We need to build as if we are a hurricane state. Every year we're going to have a hurricane hit. Then they did a study where they had a high-rise condo with hurricane impact windows, everything's safe and secure, and the loss was like with a category 5, 1 to 2%. Well, our windows just blow right out because it's just regular old glass. I mean, so in other words, we need to build, our building codes need to say, we're a hurricane state, this is how you're going to, now it's more money to build for hurricane impacted things, but again, maybe the insurance costs would be less.
I know we focused a lot of our conversation on the condo market specifically, but I'm just curious about what you're hearing about individual homeowners and if you are seeing this trickle into that space as well.
Individual homeowners are having a rate increases, but they're nowhere near as 200-300%. Their rates are going anywhere from like 20 to 70%, depending upon where they are and what the value is. The problem is we have a lot of single wall homes, and those, the hurricane comes, the wind blows those over. So that's a problem for single wall. Double wall is much better, of course. People are, like my own daughter bought a house that was single wall, double walled it, put on a better roof, things of that sort. So we have issues, but nowhere near as bad as the condo issues.
What would you say for just some advice for those who are watching who find themselves in this situation? I know you've mentioned a few tips already and things that people should consider doing if they find themselves in a tough situation like this, unable to afford some of these rises in prices. But what is your message out there? People are coming to you a lot. What is your general message and any tips that you continue to share with those individuals?
I continue to tell everybody, please maintain. The most important thing anybody can do is to maintain their complex or their home, because the insurance companies are very concerned with that. And if you can show that you've maintained it and that you're taking care of it, and pride of ownership, I mean, it makes a big difference to the insurance company because they're trusting you to take care of your property, and they just can't imagine that you wouldn't take care of it. But look at that Florida condo. They didn't take care of that. They knew it was in bad shape and that you wouldn't do the spalling because they didn't want to spend the money. So in other words, the idea is if you can maintain it and preserve it and protect it, you will get a much better rate than the condo that doesn't. And sprinklers. I hate to tell the high-rise people, but they've got to put those sprinklers in. It's a huge difference in rate. We had two condos, very similar, valuation, etc. One's rate was 30 cents, the other's rate was 65. Sprinkler versus non-sprinkler. And every year you're paying a higher rate if you're not a sprinkler building. So even though it's expensive, even though you don't want to do it, even though your pipes are old, you put the two together, get it done, just bite the bullet and do it.
What are you hearing from the carriers? Are there those who don't want to write these policies anymore or that are leaving the state? Because I do think there is also this question of, are there enough vendors in the market to satisfy all the need?
Well, the people who were writing the high-rise condos and are still here. They haven't left. They've cut back on what they're writing. They may not be taking on new accounts right now. In the old days, we would put the application out to bid to the three carriers, have them bid it, and go with the lowest. Well, right now, we're just happy that they continue to renew. So they are staying on on the risks as long as they're not having a lot of claims and they're maintaining it. But if you have, 13 water claims, they're not going to stay on you because you need to renew your pipes and you're saying, no, we're not going to renew it. Or if you have a large fire, I wish I had a condo had a large fire and they opted in not to do sprinklers. So the insurance company said, if you're not going to put sprinklers in, we're not hanging with you. So they went from 200 some odd thousand premium to 1.2 million because they didn't want to put sprinklers in. Now that they're paying this 1.2, and I've yacked with them a lot, they said, okay, Sue, we're going to put in sprinklers. I said, get them in so we can get back into the standard market.
Wow.
And just another follow-up on what you're telling people, because beyond just maintaining the building and maintaining your space, what are you also saying for those who are, maybe looking at other options for the personal policies that they have? Maybe they say, I got this quote back, this is too high, I'm going to shop around. I mean, is there much difference in the policies? Because I think a lot of people might think they might find something better, so they may not renew the current policy, look for another. What are you advising in those types of situations?
We're getting a lot of calls from people saying, oh, my premium doubled, my HO6 doubled. I said, rates are going up. You've been with them all these years, you have credits built in, just stay put. You're not going to find somebody who wants to write you. You've had a claim. In fact, a lot of carriers won't write you if you had 2 claims, even if they're 10 years apart. Even if it was only a $500, I lost my cell phone claim, they're not going to write you if you have 2 claims or not. So you're just better off staying where you are, just get through all of this, and then if you want to go out in the old 3-4 years from now and see if you get something better, fine. But I would just renew. Be happy you have a carrier willing to renew.
Do you still think that condos are a good investment, given all that we've covered today? It sounds, if I'm a prospective buyer, I might be a little gun shy right now.
You know, real estate is always a good buy. And I come from a real estate family. I've always owned real estate from the time I was a teenager. I think it's still a very good investment. I think it's the only way that the next generation is going to stay here if the older generation has real estate to give to them. Otherwise, all our young people will leave because they're never going to own. And I think that's a sad state of affairs for those of us who were born and raised here, that we can't have our own children stay put. And my whole family's here, and I've helped them to get started as my mother helped us, and I think that's what we all have to do. And I said, yes, real estate may not be great right now, but it's going to get better.
Okay. Well, Sue Savia, thank you so much.
You're
Very
welcome.
Informational, educational as well. Learned a lot about where we are here with the state of our insurance policies, especially when it comes to condos. Thank you so much. We have more Spotlight coming up right after this short break. We'll have Gordon Ito and Speaker Scott Saiki. Stay tuned. We'll be right back. Well, welcome back to Spotlight Now. We're continuing on in our conversation about the rising cost of insurance here in the state of Hawaii, especially when it comes to our condominiums in the state. We are joined now with two new guests. We want to welcome in House Speaker Scott Saiki as well as our Insurance Commissioner Gordon Ito. Thank you both for joining us and being here and part of this important conversation. Let's start off with you, Speaker Psyche. This is something that we've talked about last time you've been on this program to talk about the issues here and ways in which the legislature has looked for ways to address this. Unfortunately, the mechanism in the bill that you guys had crafted did not pass through the legislature this last session. What can you tell us about what the state is trying to do to help find some relief?
Yeah, thanks, Brian. So fortunately, the governor just created a task force, and the task force met yesterday. This task force is charged with proposing to the governor some interim solutions that could be taken by the governor over the summer, as well as proposals that could be addressed by the legislature when we start up again in January. So we did meet yesterday, and we did agree that our conversation would begin with the legislation that we had worked on during the past legislative session. Basically, the bill proposed that we provide a loan to two existing funds that provide stopgap coverage, property insurance coverage, one of which is the Hawaii Hurricane Relief Fund. That bill would provide, that bill proposed to provide a loan to those funds. Those funds would in turn then use those funds to purchase basically reinsurance that could be made available to condo buildings. And I want to emphasize that this is not a 100% solution. This is a stopgap, temporary solution. The cost of reinsurance may not be cheap; it still may be expensive, but at least it provides buildings with an option, for a layer of insurance that they would otherwise be we would find very hard to find elsewhere.
Yeah, Commissioner, what are your thoughts about that approach?
Yeah, I mean, it's an approach that we've been talking about for quite a while. I mean, really potentially restarting the Hawaii Hurricane Relief Fund that was created in 1993, as well as expand what the Hawaii Property Insurance Association, also called HPIA. In fact, HPIA has done a very good job. About a year ago, I reached out to them as I noticed the market was getting bad and asked them to start preparing to add capacity to in the event that availability becomes a problem. And they actually have started doing that. But as Speaker Psyche had mentioned, the bill would have created even more flexibility. So part of it, besides funding with the HHRF, it was to waive the current statutory limits of $750,000 for residential property, the $500,000, as well as some of the provisions in HPA to allow more flexibility and really options that the condo, particularly the condo master policy situation that's occurring.
And given where we stand with this issue, is this something that can wait to the next legislative session, or do you think that action needs to be taken before that?
Yeah, definitely action should be taken. I mean, Governor, as Speaker had mentioned, he called a joint executive and legislative task force. It's called the Condo and Property Insurance Task Force. And Speaker had mentioned we met yesterday, and we have started to continue the discussion that occurred, really following the House Bill 2686, looking at what options can be done immediately. And one is, the other positive thing is the possible restart of the Hawaii Hurricane Relief Fund, the HHRF, and the board, the governor just nominated or set forth 6 nominees to fund Speaker, 2 fund Senate President, 2 fund the governor. So the board is reconstituted. We're working on setting up the first HHRF board meeting to start exploring the options that HHRF could offer, provide some relief to the situations occurring now.
And Mr. Speaker, tell us about what this could potentially cost the state. And when we think about the relief that it'll provide to owners, this will not necessarily bring these rates down. It's just a matter of being able to have any insurance at all. Is that correct?
That's correct. Although I have to believe that if we were to create a fund that provided some form of insurance, made some form of insurance available, that would provide competition within the market, and maybe other insurance companies would react to this alternative fund. The other thing to remember is that if we were to provide startup funds to these 2 insurance funds, those would be loans, because the concept basically is that the fund, the HHRF, would take the funds, purchase reinsurance, and then sell that insurance back to condo buildings. So condo buildings would be paying premiums back into HHRF. They'll be replenishing HHRF and paying back the loan that we made initially.
And how big is that loan?
Well, it depends on what amount we want to set aside. The proposal in the session was either $30 million or $10 million. So it'll be somewhere within that range.
Commissioner, I'm just wondering, when you look at what has happened, and we heard from Sue earlier, and you look at Hawaii's past, and she said the same thing happened with Iniki, and we noticed a very similar situation there. Is this something that you also anticipate maybe will take a few years for things to settle back down? And just given the experience and what we saw in the past, how much do you think that we've learned from that, and what we're taking with the state that we find ourselves in right now?
Yeah, it will take a few years to settle down. I mean, reinsurance rate has gone up between 20 to 50% a year for the last 3 years, and that's one of the primary drivers of the increases. The other thing that's happening that's causing the tremendous really increases in condo master policy is that there's only 3 admitted carriers. Admitted carriers are authorized companies licensed to do business in Hawaii. The way Hawaii law, as well as other states, is no insurer can sell insurance in Hawaii unless they're admitted. They meet our solvency requirements. Unadmitted or unauthorized, also known as surplus lines carriers, are those that in situations where there's no availability for authorized carriers, they can come in and sell insurance. And that's what's happening in the condo market. We only have 3 admitted carriers writing condominium master policies, and there's what we call sublimits. So, for example, one carrier is only writing between 10 million to 25 million of the hurricane exposure. And for a replacement value condo, if take for example $100 million condo, they only can get authorized coverage up to 10 or 25 million dollars. The rest is uncovered that agents are scrambling to buy from surplus lines or unauthorized carriers, which the division has no rate authority over. We can't, review and approve rates on that. So that's causing the huge range in really the price increases with the condo master policy. And a lot of those rates are really driven because of really, as she did an excellent explanation of what's happening with the market. And really, the 2 primary factors is the catastrophic losses and the really tremendous rise in reinsurance costs, as well as the replacement costs. I saw an article that said between 2019 to 2022, replacement costs has increased by 55%. So that's driving, the cost of, if you get in an accident or your house burns down, the cost of reconstruction is gone up a lot, right? And so that's causing the premiums to rise.
Speaker Saiki, you represent District 25. That includes Ala Moana and Kaka'ako. Those are heavy condo districts. I'm interested in the question that Ryan had posed about developments that are going up, and also the constituents that you have that are experiencing this. What are you hearing both from developers and also from individuals?
Yeah, so on the developer side, when the developer makes the building available for sale, the building is usually fully insured at that point because the developers are able to layer insurance and find coverage, so the buildings are insured. But what happens later, maybe a year later, when the association takes over the building, that's when the association has to find insurance on its own. And that's where they start to run into problems because, for example, there's a building in my district that is opened up about a year ago, and they were in that situation. It was fully insured, but then a year later, they became underinsured. And then they had to make a decision, fortunately, to become fully insured again. The owners had to pay an assessment to become fully insured. So, on the developer side, the buildings are usually fully insured. For individual unit owners, I'm hearing just a range of situations in our district. One building has decided to not be fully insured. One building has put it up for a vote to the owners whether to become fully insured. One building was not fully insured, but then made assessments. So people have not been able to obtain HELOCs for their units. They're not able to sell their units. I mean, there's all kinds of scenarios going on. in our condos.
Yeah, and I'm just curious, as you begin those conversations and you have, you're talking with some of those owners and maybe even some renters who may be seeing some of the impacts as well. Overall, I mean, how is that shaping some of the policy that you guys look forward? Because this is one mechanism, as we talked about, a way of relief, but there's other maybe things that you guys can look at in the legislative session. Are there anything specifically else that you're looking to help find relief for those who are, just worried about costs of living going up with these rising expenses?
Yeah, so there's something. If there's one thing I want viewers to remember is what I'm going to say next, and it's called the CPACER program, because this is a really, really important program, especially for condo buildings that need to do repairs, that have deferred maintenance issues. The CPACER program was approved by the legislature in May, and it just got unveiled yesterday, so it's now in effect. The CPACER program basically is a financing program. It will allow condo buildings to obtain a private loan for building repairs, qualified building repairs. Qualified building repairs include things like fire sprinklers, water pipes, energy efficient measures such as lighting, plumbing, and air conditioning. The program will allow for the loan to be amortized over the life of the improvement, which means that that it's usually a longer term in which you can pay the loan back. The loan will be repaid by unit owners in the building through an assessment on their property tax bill. So there's two immediate benefits to this program, to this financing program. The first is that because it's financed, it avoids a large front-end assessment on unit owners. And then second, it's a pay-as-you-go system. So unit owners are paying this loan back through their property tax bill. If a unit owner sells his or her unit, then the new unit owner takes over those payments. So it's a pay-as-you-go system. So this program is going to provide some form of financial relief or to mitigate the cost of building repairs. There are so many condo buildings in our state that have deferred maintenance, that have to make some major renovations. They should take advantage of this program.
Yeah, and Sue did note that is such a big part of the cost. And when insurance carriers are looking at a building and saying, did you get a new roof? Did you not? That obviously
Right.
could be very useful.
And the website is gems.hawaii.gov, so GEMS.
Okay, good to know. Commissioner, I'm interested to know, and I don't know if this is necessarily just the state, because we know Fannie and Freddie are federal, but is the threshold too high for some of these buildings? Do they really need to be at 100%? When she's talking about some of these buildings that are newer, that are concrete, that are not necessarily the wood frame, do you think that the threshold is too high, and is there a way to lower that so that these master policies would not have to be so extensive?
Yeah, I mean, that's a good question. And actually, the banking regulators actually and the mortgage lenders have been talking to Freddie and Fannie. But, from the Freddie and Fannie perspective, I mean, they're trying to protect the loans that they purchase, right? And so that's why I think the starting point for them is to have fully replacement costs in case there's a building that's ultimately destroyed. I think what happened in Surfside, really was a wake-up call, for the whole condo area, and really how it's viewed and how much protection is needed. So that, I think, was one of the trigger points in terms of that requirement on 100% replacement costs.
And I'm wondering how much does, we talked a little bit with Sue about just the elements and climate change and things that are happening that are causing disasters throughout the country. Commissioner, I'm wondering, with Hawaii and what we're looking at, the dynamics of our environment is changing as well. I mean, back when I was growing up, we never even thought about wildfires being something of a threat. Now, obviously, it is. Combine that with hurricanes that we get that other states don't have. I'm wondering if just where we are, our location, the environment, all those factors, how much is that changing the way in which our insurance is developing over, the span of these years and as we see these changes?
Well, I mean, with Hawaii, I mean, weather, obviously, as far as the air temperature is increasing, and that's why I think with respect to the storms, there's more frequency of storms, the severity, the strength of the storms. Like Burrow, for example, the intensification is just incredible, going to a Category 4 very quickly, and then now a Category 5. So there is more damage as a result of catastrophe, as Sue noted in 2023. I mean, there were 28 events in the U.S. Over $1 billion each. In the 80s, I read an article. On average, there was only 3 events that was $1 billion each. And between the 2000 and to maybe a few years ago, I think the average was maybe 8 events. So the severity and the frequency is starting to, and that's really the main reason why reinsurance costs have just skyrocketed the last few years.
And that's not unique to Hawaii. What
No.
are you hearing for your counterparts on the continent, and how are other states handling this?
So even other states, I mean, they're for talking about the condominium. I mean, they're having similar problems, but obviously it's not the hurricane exposure, but it might be like hail exposure and the losses caused by hail. So everybody throughout the country has experienced, similar types of increases, and really we're in a very, what we call a hard market, extremely hard market, where availability is limited and the costs have gone up tremendously.
Speaker, I asked this question to Sue about just the overall impact that this is having towards the state. I mean, especially when you think about the cost of living being one of the major issues that you guys are continuing to tackle at the legislature. How much of this impacts just the overall game plan as you look for more sustainable alternatives to providing opportunities for people to own homes? This has to be a major roadblock in that, and how what are some where does this stack up, I guess, in the laundry list of things that you have to do?
Yeah, absolutely. I mean, everyone who is concerned about building more housing inventory in our state has to be concerned about what's happening here, because then the mantra has been build high rises in the urban core so that you can preserve everywhere else. And in order for us to do that, we have to address issues now like property insurance. And the concern that we have is that, and we mentioned this throughout the legislative session, was that this issue would not just impact condo buildings, but would affect other forms of housing. And that's exactly what's happened, because now townhomes are affected, and in some cases, single-family homes are being affected. So this is a issue that's larger than just high-rise condo buildings.
Yeah, let's continue that thread. What are you seeing in the other markets when we get out of high rises? What kind of rate increases are you seeing, and what are your concerns there?
So in the authorized, in the homeowners, the HO3, I mean, the average increases really have been somewhere between 10 to 20, 25% the last few years. And as the primary driver, again, is reinsurance and the replacement costs. Cost of construction, material, labor has increased. So that's one of the primary driver. In the HO6 with the condo unit, probably somewhere about 10 to 20, again, 25%. It's not like what's happening with the condo master policy, because again, it's a surplus lines carrier, and the rates that are really, very, very extremely high. That's causing a lot of the increases. I think Sue had mentioned on the condominium master policy, just on the hurricane exposure, the average increase on the condo master policy has been between 300 to 500% on average, right? I mean, and that's because of really the surplus lines and really the cost of reinsurance. And
knowing that if you are an investor or if somebody wanting to purchase a home or a condominium, do you think that it's a good time to do that now? Would you stay out of the market? I know you're not a real estate investor, but clearly when a 300 to 500% increase year over year, that most of us cannot handle that.
Well, you took my words out of my mouth, because I was saying I'm not a realtor, but. As I think as Sue was mentioning, it's really to stay the course. I mean, it's really dependent on the potential buyer, whether it's an option. Condominiums, has a place. We're hoping that, 300, 500% increase is not going to occur year over year. And we are taking, proactive steps to try to really stabilize the market and even mitigate some of the increases. Like Speaker had talked about, reactivation of the Hurricane Relief Fund could possibly take a layer of the hurricane exposure that condo master policies are being ceded out or sold to the surplus lines. And that may, increase competition and, help stabilize the rate. So, definitely it is an issue. The governor is very concerned. The legislators are very concerned about what's happening, and we're doing everything we can as quick as we can to try to stabilize what's happening and really maintain availability and really provide some stability on the rates. And I'm starting to see some positive signs, as Sue mentioned, on the reinsurance in this cycle, the June-July renewals. I think the average reinsurance cost is going down between 2.5% to 5%. So we're starting to head in the right direction and keep our fingers crossed there's no major catastrophic loss, right? And there's from what we're hearing, there's other carriers that are coming potentially back into the market and providing a little better competitive rates.
Speaker, I just want to, just as we kind of wrap up this conversation, and you are looking at ways you're having these conversations with the administration and with the commission and those in the industry. Again, this is something that's going to be long term. What's sort of the long term plan? I mean, we know that there's sort of a plan right now, but knowing that this could be something going on for a while, how do you think we best resolve this long term to be able to solve this issue?
Well, I mean, long term is going to take a number of factors that we have to really work on. Besides providing for a source of insurance, such as the HHRF, wildfire prevention is going to be really important. We have to be able to mitigate disaster risk in our state. As you know, there's so many fire zones in Hawaii, and we have to be able to manage all of those areas. It's going to be important for condo associations, for the boards, to kind of step up to the plate now. The role of the board is really, really important. The board members have to understand what's going on. They have to be educated. They have to consider all options. They have to do their research. They have to make tough decisions. They got to make sure that their buildings are in good repair, which is why they have to use the CPACER program to finance their improvements. And then condo unit owners have to also take responsibility to make sure that their units are safe and that they are doing what they can do to prevent losses such as water leaks in their units.
Okay, well, we got a real education today on this issue. We thank you both for being here. Thank you for being here. We'll be right back after this.
Spotlight Now with Yunji Denise and Ryan Kalei-Suji. Connecting you with newsmakers from throughout our islands. Going in depth with Hawaii's leaders and taking your questions live. Spotlight Now, where Hawaii comes to talk.
What interesting conversation today about a topic that I think a lot of people have heard about, but maybe weren't educated about or didn't really know the impact that this rising cost of insurance is having, especially on the condo market. We heard a lot from Sue Savio and just the advice that she's giving to many people that she's having these discussions with. She says, buckle in, settle down. This could take a few years.
I mean, it was so interesting to hear from her, and this is happening basically across the board. She says that no one has been exempt from this, whether you own a shopping center or a large condominium. You are facing this issue, these master policies going up 300% to 500%, and hopefully that not being something that continues year over year. You also heard from the guests in the second half about some steps the governor could be taking. They're convening a special group already. They met yesterday to hopefully address this issue as soon as possible.
Yeah, we're going to actually be speaking with the governor on our next episode of Spotlight Now about this issue, about the importance that some of these guests have expressed, where it stacks up on his list of things. We have a lot to catch up with the governor, including a veto list that he will be having to make a decision on, as well as a lot of other updates about what's happening in Lahaina. Always a lot to talk about with Governor Green. We hope you'll join us next week, Tuesday, right back here for another episode of Spotlight Now. We'll see you then. Aloha.